The Philippines' gross domestic product, GDP, posted a growth of 6.4% in the first quarter of 2023. The strongest so far, amongst the ASEAN 6, when Indonesia grew by 5.03%, Vietnam by 3.3%, and Singapore by 0.10%. It is a drop from the 8% growth seen in the same period in 2022, and 7.2% in the previous quarter. In addition, this is the slowest pace in 7 quarters since the 12% in the second quarter of 2021, according to the Philippine Statistics Authority. But still, the first quarter readout is better than the private sector economists' median forecast of 6.2%. Nevertheless, even as the Philippines lost momentum in the January to March quarter, it was on track to meet its 6 to 7% growth target for the year. The main contributors to the first quarter of 2023 growth were wholesale and retail trade, repair of motor vehicles and motorcycles at 7.0%, financial and insurance activities at 8.8%, and other services expanding by 36.5%. All major economic sectors posted positive growth in the first quarter of 2023. The services sector expanded stronger by 8.4%, followed by industry by 3.9% and agriculture, forestry, and fishing by 2.2%. On the demand side, household final consumption expenditure grew by 6.3% in the first quarter of 2023. The following items also recorded growths: government final consumption expenditure at 6.2%, gross capital formation at 12.2%, exports of goods and services at 0.4%, and imports of goods and services at 4.2%. The main contributors to the slowdown in the GDP growth in the first quarter were mining and quarrying, which contracted by 2.2%, public administration and defense, and human health and social work activities. The country's gross national income, GNI, grew by 9.9% in the first quarter of 2023. Likewise, net primary income, NPL, from the rest of the world increased by 81.2% during the period. About 3/4 of the total growth of the economy could be attributed to growth in domestic demand, which means that as long as domestic confidence remains strong, the economy would be able to weather global headwinds. Still, there are some risks that come with this sustained growth. The exports of goods and services grew by a tiny 0.4% due to weak global demand. In particular, the export of goods contracted by 15.3% during the first quarter of the year. Regarding the decline, the cause was pointed to the sensitivity of manufacturing to global trade. The country's major exports were particularly hard hit, as semiconductors shrank by 25.2%, office equipment declined by 42%, and electronic data processing fell by 27.9%. High costs of food inputs, such as sugar, could have also reduced the profitability of those in the food manufacturing industry. The higher-than-expected growth comes in an environment of high inflation and continued interest rate hikes. Though inflation slightly eased to 6.6% in April, it remains above the target range of 2% to 4%, still mounting into the wallets of consumers. Back in January, inflation soared to 8.7%. The headline inflation rate appears to have reached its highest point, decelerating to 6.6% in April 2023 from 7.6% in March and 8.6% in February. This downward trend to continue as inflation eventually eases to the government's target range by the fourth quarter of 2023. The latest inflation report numbers look promising. The Asian Development Bank also sees 2023 growth to be around 6%, riding on a wave of rising domestic demand and a revival in tourism, but dampened by inflation and geopolitical tension. Given the first quarter GDP results, the government maintained its target of 6% to 7% growth in 2023, and 6.5% to 8% for 2024 to 2028.